daily,
Hmm.
the basic idea. It's a strategy maybe for turning daily earnings into potential passive income over time.
Right. And we're looking mainly at the FAQ, what is daily asset accumulation.pdf for this one.
Yeah, that's our source. Our mission here is simple. Figure out what this strategy is really about and, if it could actually be relevant for you.
Well, the core concept, it's actually pretty straightforward when you look at the FAQ. It's really about habit building.
A habit? How so?
It means taking a piece of your daily earnings,
Mhm.
specifically, they mentioned USDT commissions and mined APTM, and putting it into the APTM USDT liquidity pair.
On a DAX. Right, a pertum.
That's the one, Apertum by DAO1.
And
And the key part is daily, making it a routine, consistent action.
okay, wait. So does that mean you have to dump all your earnings in there every day? Because that sounds like a lot.
No, no, not at all. The FAQ is quite clear on this. It's definitely not an all-in kind of deal.
Ew, okay.
They even give an example, like maybe 10%. The beauty is the flexibility. You allocate that portion, that 10% or whatever you choose, and the rest, it's still yours.
Right, to hold or spend or
Right.
whatever.
You keep control over the majority.
Okay, that makes more sense. So why do it that way? What, just a slice? What's the upside to only putting in a bit?
Well, there are a few good reasons mentioned. First, you lower your exposure to something called impermanent loss. We can touch on that maybe.
Yeah, let's. Impermanent loss. Sounds a bit scary.
It can be, but basically it's the risk that the value of your paired assets in the pool goes down compared to just holding them separately because prices moved.
Okay.
But by only putting in that smaller portion, say 10%, especially with a pair like USDT and APTM, which might have some synergy, you're naturally limiting how much is actually exposed to that risk.
Ah, got it. So less skin in the game for that specific risk.
Precisely. And the other benefits. You keep most of your assets liquid, available for other things, maybe emergencies or other opportunities.
Right, you're not tying everything up.
Exactly. And you're still putting some assets to work, generating a daily yield while keeping your main stash relatively safer. It's about balance.
Okay, balance and flexibility. You mentioned consistency and small amounts.
Mm.
The FAQ compared it to DCA, dollar cost averaging.
It did, yeah. It's a good analogy. Think about DCA. You invest small amounts regularly, regardless of price.
Smooths out the bumps.
Kind of like that.
Yeah.
Here, you're pairing small amounts daily. Over time, these little bits can compound. You're steadily building up an asset position that earns fees without trying to guess the perfect market moment.
So it's the slow and steady approach.
Potentially, yes. It's the power of consistency, possibly building something substantial over the long run.
So this isn't saying stop selling your assets or don't hold anything long term.
Not at all. The FAQ is really clear. It positions this as a both-hand strategy. Yeah. You can still sell some earnings if you need cash. You can still hold assets hoping they'll appreciate. And you can do this daily accumulation thing with a portion. It adds another layer.
Diversification of strategy, then.
You could say that. A more diversified way to manage what you're earning daily.
Okay, practical question. Where does the pairing actually happen and what are you earning from it?
Right. So it happens on the day X, specifically dx.apertum. And what you earn is a share of the trading fees.
Trading fees.
Yeah, there's typically a fee like 0.3% mentioned in the FAQ on trades within that APTM USDT pool. As a liquidity provider, you get a piece of that fee proportional to your share of the pool.
And that keeps coming as long as your liquidity is there.
Correct, as long as you're providing the liquidity.
Yeah.
The FAQ suggests the annual yield could average around 20, 30%, maybe even higher, depending on how much trading happens.
Interesting. So 20–30% potential yield on that portion you allocate.
That's the range they mentioned, yes.
Okay.
Depends on activity, of course.
All right, so let me try and wrap this up. Daily asset accumulation. It's essentially a habit, consistently taking a small slice of daily earnings, putting it into a DEX liquidity pool like APTM USDT on Apertum.
Yep, that's the core.
The goal being to gradually build up a passive income stream from trading fees without going all in, keeping flexibility, and managing risk like impermanent loss.
That sums it up really well. It's strategic, it's partial, and it fits into a wider picture. Not a replacement, but an addition.
A both-hand approach, like you said.
Exactly.
Okay, so a final thought for you listening. Think about your own situation. Where could applying consistent small actions today potentially build up something more significant, maybe a passive income stream down the road, just something to mull over?